With OCBC reporting Q1 2023 earnings on May 10 and after the stellar reports by DBS and UOB, many are expecting the same from OCBC. 10 days ago, I produced a video sharing an analysis by DBS which warned that OCBC's earnings likely peaked in Q1 2023. DBS also downgraded OCBC, reducing the target price for its stock to $13 a share. Although DBS and UOB reported stellar Q1 2023 results with OCBC likely to follow suit. DBS Group Research is warning once again of limited upside for net interest margins for Singapore banks going forward. The rapid and substantial rate hikes by the US Fed saw 9 rate hikes in 1 year. This has brought interest rates up by some 500 basis points in a very short time. It resulted in a strong tailwind for Singapore banks as net interest margin hit the highest in 10 years. This is the initial effect of soaring interest rate with interest rates for deposits slower to catch up. Stronger deposit pressures have caught up and was amply evident in Q1 2023. DBS Group Research now expects not only muted quarter-on-quarter net interest margin expansion but also possibly a deterioration for all 3 Singapore lenders. They made the following observations. Industry loan growth continues to be weak and has in fact contracted. With the volatile and risk-off attitude of many investors in the wake of bank failures in the USA, the research house believes that market activities are unlikely to rebound to 2021 levels in the near term. This will affect the wealth management income for Singapore banks. Asset quality risks are likely to rise because recession risk has become elevated. High interest rate and high inflation will make this worse. It is easy to be lulled into a feeling that all is well when the banks report stellar results for Q1 2023. However, we should be cognizant that we could be in the eye of a storm. Emerging from COVID-19 pandemic-induced bear market, there was euphoria as everything seemed to be going swimmingly with the Fed keeping interest rate at 0. Then, things fell apart. Lim and Tan Research believes that the chance of a recession is rising rapidly in the USA. Financial conditions are very restrictive. The Fed misread that inflation was transitory and they are likely to make another mistake this time. They could keep interest rates too high for too long. Credit is growing tighter day by day in the USA with more regional banks failing and the rest trying to stay afloat by being more defensive when it comes to lending. Lim and Tan Research believes in staying defensive as there is a potential downdraft in global equities in second half of 2023. This morning, I read that Warren Buffett's Berkshire Hathaway sold a net $10 billion of stocks in the last quarter. Maybe, he is trying to tell us something here. Warren Buffett also warns earnings decline are on the cards for Berkshire businesses. He said that an incredible period for the economy is coming to an end. Hard times could be upon us. I have said this before, and I will say it again. Keep some powder dry. Younger people who have not experienced the Asian financial crisis or the global financial crisis will laugh at me. That is the advantage and also disadvantage of youth. They feel invincible. In case you are beginning to think that AK is the harbinger of doom, I am just stating facts. I am not all doom and gloom. I am planning to win whichever way the market goes. I do not believe that DBS, OCBC and UOB will go bust like Silicon Valley Bank, Signature Bank or First Republic Bank in the USA. So, like I have said many times before, I am staying invested. However, I am not adding at higher prices but would instead patiently wait for the market to go into a depression. What if the market goes on a bull run from here on? Being already substantially invested in the local banks, there is no hurry for me to add to the positions. There is no fear of missing out. We want to be able to benefit from both upside and downside. Stay invested and have a war chest ready. If AK can do it, so can you.